All right. Yeah. No, I had to click, I had to sign off the audio, just to reload it and go through the disclosures, but it should be good now. Can you hear me? The screen should be up. The audio should be up. Uh, just have to run through the disclosures. Okay. Perfect. So if you can, the video feed's working okay. You can see me. Okay. Great. So, um, yeah. Us. I got. Sorry. It's good. I have so many things I want to go over. I like to talk about. Um, well, first things first. Like these are always recorded, and they're usually up no later than like the afternoon the following day on T3's website. So, if for whatever reason you can't make it, or even if you just want to go back, go over one of like the sessions, maybe a couple months ago. They're up there. They're at your disposal whenever you want to go through them. Feel free. If you ever have any questions about maybe something we went over in like a previous session and you want to like circle back, don't hesitate to reach out to me. Either personally or if you want to bring it up during one of like these times we get together. Like that's totally fine too. I mean that's what these uh, these sessions are all about. Just trying to help whichever way we can, like talk options, try to like go through different ideas. So, if while you're reviewing, like maybe like the last coaching session or like some from like a few months ago, if something comes up, please just don't hesitate to reach out. All right. Um, so I mean, sometimes like I know we spend a lot of time going over just like the SPY, the Qs, like what I call like the state of the market. Um, Sometimes it's like a slower market or a slower tape, and maybe we spend like a disproportionately large time going over it, even when it's like kind of like a uneventful, non-volatile um, market at the moment. But I like doing it because I feel like it really kind of solidifies ideas, it solidifies levels. It really kind of sets the stage for um, maybe being able to react a little bit faster when things start to change a little bit. We've talked uh, really since October. We talked about how the momentum was so strong, how the action was really just so steady, so consistent. We were riding the 8 EMAs for a long stretch, and then when we lost the 8 EMA, it was like we'd find support at the 20, right? And then even um, early in February, right? We broke down. I was actually, excuse me, it was in January. We broke both, hit the 50, and then snapped right back. So again, we reset like really quickly above the 8, above the 20. So it's all about like trend, right? So like when the trend's intact, you're looking at bullish strategies, lower volatility strategies, because really like the action is a little bit more methodical, it's more consistent, it's a little bit more predictable, right? And like the big thing that happened last Monday was gapping below the 50 day, all right? Because that really was like the ding ding ding, like the bell when it was like, okay, last Monday, I mean, it was ugly. I mean, anytime you have like a 9, 10 point gap down in the spiders, it's like, you know, it's ugly no matter what. But it was also like twice as ugly, technically, because we lost all of those key momentum moving averages that were really so critically important for the entire stretch between October and February, right? So, you know, at the time, like last Monday, you had a lot of people that were talking about, oh, it's just another garden dip, a garden variety dip. We tend to snap back, right? Like these are the moves. Like 2 days later, 3 days later, we're back at an all time high. But what you really what you really noticed and what you really to me gave me a lot of pause was losing the 8, the 20, and specifically the 50, because the 50 was the absolute bottom for the move in late January, and then more specifically the 8 and the 20, like those are really critical momentum moving averages. So not only did you have like a huge gap down, but that huge gap down took out multiple key levels of support, and obviously, like that's when everything really started to fall apart. Is when we lost those higher momentum moving averages, right? And I mean, to be honest, like that's kind of like the pattern of the market the last couple of years. I mean, we've seen this play out like more than a couple of times. I mean, like this has been kind of the MO. We have like these really long stretches, right? You get like these long stretches of low volatility, kind of a grind, and then once we lose like those higher momentum moving averages, that's when you really see like the pickup in the volume on the downside, the pickup in the and kind of like the slope starts to steepen on the downside, right? The volatility starts to ramp a bit, and it's like time and time again over the last 2 years we've seen that pattern, right? So it was in October 2018. You saw it in May of this past year, right? I mean, to a lesser extent, July and August, right? And then the chart won't go back as much, so I have to go to like a daily. But in February of 2018, I mean, really kind of like the same patterns. Like we go through like these long stretches of low volatility, steady, consistent, trending action, and all of a sudden, I mean, like the reason kind of changes each time, but like the actual way it plays out is very similar. So, this time it was the coronavirus. In May, it was like the tariffs, right? Like in October 2018, it was like the Fed raising rates. In January, it was, I don't even know why, in January 2018, we had like that pullback. But like the headline or the reason for the drop changes, but the actual action is very similar, all right? So, so now, all right. So now we now you got to expect like a really fast, loose tape until we start to consolidate. And I don't know when that's going to happen. I mean, 4 out of the last 5 days we've had actually no 5 out of the last 6 days we've had 10-point intraday moves on the spiders. So at one point during the session, 5 out of the last 6 days, we've had up or down 10 points, which is crazy. I mean, like, that, again, like, we have months where we move 10 points. So October, November, December, January, we move 10 points for a month. And now 5 out of the last 6 days, we've moved 10 points in a single session. So right now, it's very fast, very loose. Today was kind of a big day because we reclaimed the 200 day. All right, and people really kind of focus on the 200 day because it's like a longer term level. On the downside, we basically blitzed through it like it was non-existent. This was on Thursday, so you can see when we traded through it, it was like a hot knife through butter. It really wasn't that significant of a level. We just blew right through it on the downside, and now today, actually, the finish. The finish was very strong, but actually earlier in the day we back tested the 200 day, so it's like right underneath 305, so it's like 304.50, I believe. So if I go back during the day, you can see that we actually bounced, and then like earlier in the morning, in the afternoon, we actually back tested the 200 day, failed at it, and it looked like we were setting up for a pullback, but then into the close, we just had like this epic rally and just blew right back above it. So I'd say I'd say like right now for the time being, like maybe like the weekly, maybe like the 2 week bottom is in on the spiders. After like the 2 day reversal here, I don't know if I want to like go out and say like like the absolute bottom of this move is going to be in, because when we do that amount of that amount of damage that fast, I feel like it could take a little while to recover, or we could potentially have like another like lower, kind of similar to what we did in October 2018 through like December, right? Which was like kind of like we're showing some similarities between that and what we're doing right now. So if I go back, you can see. So um, we basically blew through a couple real key levels in October 2018, and then we kind of like chopped around, um, built like a lower range, and then we had like another material like lower, like 2 months later. So that to me, I feel like that might be kind of like how I'm looking at this as maybe like kind of position if we do get a bounce, maybe position a little bit more on the bear side to see if we do get like that next leg lower. Because my thinking is like we still have so many companies that are probably still due to warn, right? Apple warned 2 weeks ago. Microsoft warned last week. After the close tonight, Microchip warned. But I mean, I feel like that's the tip of the iceberg. Like, how many other companies probably are still due out to warn, right? And analyst estimates probably too high going into this quarter. I mean, you haven't really seen a lot of analysts adjusting their numbers yet. So I feel like the combination of people that maybe were too net long that want to lighten up, right? If we get a bounce, maybe people lighten up into the bounce. Also, the combination of maybe like another wave of warnings combined with like analysts kind of scaling back their expectations, walking back their targets, right? Um, I feel like that might be what would potentially trigger like that next leg lower. So I'm approaching the market from like a more of like a faster trade point of view. All right, so like I'm looking at like a little bit quicker trades. I mean, we're still doing swing trades, but like those are more like 2, 3, 4 month time frames. I mean, I feel like that's like the swing trade time frame that kind of works in like a really volatile environment. Outside of that, short term trades and like kind of like waiting to see where we consolidate on the spiders, right? Because that's really going to like set the tone for I feel like the next major move, right? So if we consolidate above the 200A, slight net positive. If we get above the 100A, even slightly more positive, right? But if we bounce and we fail at the 100A, then that maybe starts to create like an area where you can start to focus on some short ideas. All right. But I'm sure like you noticed. So like as we dropped, I was really trying to make concerted effort to really start to close out like the bearish trade ideas a lot faster. And then as of like Thursday, Friday, like a lot of the trade ideas like flipped to more like bullish, and that's really just because I mean we dropped so far so fast. It made sense to lock in like the downside trades and then look for a potential rebound. So like now that we're rebounding, probably start to look to lock in some of like the bull trades. And I mean I still in the back of my mind I'm still thinking that we have like another leg lower. So I'm looking at where we consolidate, or like first of all when we consolidate, where that consolidation takes place, and then does that create short opportunities? So like for like another potential significant leg lower. All right. I mean, so what do you guys think? I mean, I mean, like, those are my thoughts. A lot of that has to do with technical, but also, I kind of like, it's hard to like not have an opinion, right? Like, I try to separate my opinion from like the technical aspect of it sometimes, but it's not always easy. Um, right now, I mean, technicals are saying we got like a nice little bounce taking shape. My opinion is that the bounce maybe more of an opportunity to lighten up on the long side and start to focus on like some shorts or bearish trade ideas. Any opinions? What do you guys think? Q's, Q's slightly different. You can see what's great about the Q's is that they basically hit the 200A almost perfectly, right? So if you're trying to compare averages, obviously like the Nasdaq is the strongest, and that makes sense because tech for the most part um, really outperformed, right? Yeah. So like so tech really outperformed for a long stretch at the end of last year, beginning of this year, and even during like the recent pullback. Even though some of these tech names probably like like the Apples, some of like the semis, like so. Even though like some of these tech names are really probably more exposed, they actually held in relatively better. So now the Qs repaired themselves quite a bit better on this recent bounce. Um, like that to me, like you can see like really like really highlights the relative strength because they're back above the 100, and actually, I mean another 5 points, another like 2% on the spiders, and they could theoretically reset above the 50 day. So that'd be even more impressive. So right now, that's why a lot of like my trade ideas are focusing around tech on the long side because tech, relatively speaking, looks better than some other areas. So that's why on the long side when we started to get hit, you saw more like bullish tech ideas pop up, and that's really because um, it's really just because like tech, just generally speaking, is hung in better. Yeah, no, I totally think it was a combination. So, um, it's obviously it's obviously a horrible it's a horrible disease, right? A horrible development, and it's taking a toll on people like increasingly across like the world, right? Um, but I you know not to diminish like the human aspect of the disease, I think it actually was arguably like more of a net negative for like businesses and stock market, right? Because like you said, it was like an overbought stock market that had gone a long way in a short period, combined with a lot of companies that were trading at like multi-year valuation highs, or even like maybe like like all-time valuation highs, right? Like Apple specifically, right? I mean, that was trading at one of its highest valuations in like 15, 16 years after it had basically doubled. Um, so like that to me, it was like a definitely a setback for businesses, and then because of that, it kind of filtered through and took like a disproportionately large hit on stocks because stocks were so overbought, so stretched after such like a long aggressive rally that it was a kind of combination of people being like caught off guard, businesses unexpectedly seeing like a serious downtick, right, in their visibility, right, like Apple had to abandon their guidance like a week and a half after they gave it because like the environment like changed so dramatically, right. So I think it was like a combination of obviously negative headlines, but then overbought stocks, expensive stocks, and just again like algorithms too. Like they always kind of like compound everything. Like I feel like black boxes. When things are rallying, they rally further than you expect, and when things are selling off, they sell off further than you expect, just because just like I feel like the nature of like algorithms. That's it's kind of like it kind of like compounds and really makes like any move like that much further and that much sharper. It's just it's really hard to like figure out like on a day to day basis like Apple. You know, I, I I think these stocks were due for a bounce. I don't know if again like I don't know if Friday's low on Apple's going to hold as like the absolute low of this move. Um, but you figure like if people are going to step back in on so if stocks pull back, right? If the SPY pulls back, if the Qs pull back, you know, realistically speaking, what are most people probably going to gravitate towards? It's like the names that they're comfortable with, right? Like so if you see like a correction in the stock market, if you see a pullback in the stock market, the names that are probably going to get a lot of the interest are the names that people are most comfortable with, that they have the most familiarity with, right? So like the Apples and the Amazons, right? Like those are the names that'll probably get more of like the money flow, like versus like as much as like some of like the beaten up industrials, or like or like Boeing, right? Like as much as some of these names are probably equally due for a bounce, or like Exxon Mobil, right? Like these names are probably as due for a bounce, if not more than Apple, right? It's just like people they're going to go back into like what they're most comfortable with, what they're most familiar with. So that's why I feel like Apple, Amazon, Facebook, Google. I mean, like those are the name Microsoft, right? Microsoft is up $10 today. Like those are the names that people will probably step into first. And then if we actually get like a sustained rebound, then you'll probably see like a lot of other things start to join too, right? So once we get like that sustained move, then you'll get like kind of like the secondary, tertiary plays start to like gain some more interest. Yeah, yeah. I mean, like you know, I mean, just based off like the text messages I've gotten from friends or family members that really they don't trade very actively, but they whenever like volatility goes or the markets go crazy and volatility gets like so elevated, people reach out and they're like, oh, what should I do? Like, I want to do this, I want to do that, right? And I'm just, most of the time, like their questions revolve around like Apple or some sort of tech names like Tesla, right? People were asking about Tesla, so it's not surprising that Tesla was one of the names that had a really sharp bounce today. But again, I, I I think like it's a trading tape now. So when you get like these really sharp moves higher, sharp moves lower, I'm more interested in like taking the trade off faster. And then once things like consolidate, so like once like the SPY really starts to consolidate, or the Qs start to consolidate, then we can kind of like start to position more because then we have like a little bit better idea of like like where things stand, right? Because like right now we're moving so quickly, so fast, like blowing through just like key level after key level on a day-to-day basis that it's kind of hard to have visibility for like 2 weeks, 3 weeks, 4 weeks down the road. I mean, it's more of like you're kind of just reacting to what's going on. And when you get like these really fast, big moves, like I'm personally just more interested in like locking in the trade, and then when things consolidate, then I can start focusing more, maybe more on like digging my heels in on like longer term positions, right? Or maybe like those midterm positions, like the 2 to 3 week trades. Speaking of VIX, so the VIX retreated today, but still in 30s. All right, so that impacts options uh, all across the board. All right, so I'll, I'll go over it a little bit more, just what I mean. But like, I mean, like most people, they think when the market drops, right, and the fix like really pops, puts get more expensive, which is true, right? Like when the VIX goes crazy, like the demand for puts is typically that means there's like a premium for the demand for puts, right? Everybody's rushing in to buy hedges, protection, right? So like the cost of puts really escalates real quick. Um, but what people also don't typically realize is that like the cost of calls actually goes up too. So you're basically paying elevated prices on options across the board now. Like, and sometimes in some cases, like these option prices are like prohibitively high. Like almost like you can't even trade them. They're so expensive. Um, yeah, I mean, so like, um, you know, like I just wanted to like highlight this like because like when you have the VIX, I mean, if it came back down into the mid 20s, that would still be elevated, but it also would be well off of the levels that it was at just 2 days ago or last week, and that could actually really create like a nice opportunity for the option trades because right now the prices are just so expensive that I mean you basically you either have to pick your points perfectly or you have to do some sort of like complex strategy to really get your overall like net debit down because the implied volatility is absolutely ridiculous. I mean it's um, again like I'm gonna go over like what I mean with like spider contracts just after like after we do like our slides in a second, but I mean just quickly like coming into today like the Spiders ended up finishing up like 11 and a half points today. So by any stretch, that was in a huge rally today. But like the problem was is that the SPY Monday expiration option, so the contracts that expired this afternoon, they were pricing in 10 points. So it almost is like, yes, you made money, but you had to lay out 10 points for like the spider straddle that expired today. So I mean, like the pricing was just astronomically high for like one day of action. It makes it very tough to be like a net buyer right now unless you really pick your spots carefully, and or have some sort of strategy where you're able to like get that risk down, because just your standard calls, standard puts are just extremely elevated because of like the overall level of VIX. So as much as I can enjoy like these $10 days, like $10 up, $10 down, it would be nice to see the VIX come back down, even if it's just into like the mid to high 20s, because that could really help out from like an option pricing point of view. That's what I'm. But I'll go over what I mean with like the sweaters after our slides. All right, so kind of quickly, just treasuries, right? So still, this is at the moment like really like the only safe haven, um, because this is still acting well versus gold and silver, which have kind of like really taken like a step back the last couple days. So treasuries still are like the best safe haven. Like utilities pulled back, REITs pulled back, staples pulled back, gold pulled back, silver got demolished last week, but treasuries still acting great as like a safe haven. So this is like one of the names where, I mean, right now like the contracts are March, so like the TLT March position um, is only like 3 weeks until expiration, but I think we stick with this, we roll this, because like if the volatility does remain high, I know the bonds are up a lot in a short period, but it also seems to be like the one safe haven that's still um, acting like it should be. Let me put it that way. So I mean, they are extended. There's multiple serious gaps right on the downside. So there's a gap from Thursday into Friday, and then there's like another gap from early last week. So from Monday. So there are gaps, and the plan will be to stick with the TLT, some sort of TLT bullish position. We'll scale back the net debit on it, but I want to just stick with a bullish position on this, because it's still acting really the best out of any of like the safe haven assets, right? And what I mean by gold was, you can see really nasty reversal in gold. Gave back that huge like breakout run rally. It is holding like a higher level, but right now that's shaping up as kind of like almost like a V top in gold, and if it does lose the 50-day, it could potentially have like a date with like the low 40s. So I'm not thrilled with the action on gold right now. Um, that's what I meant, like the safe haven. And then silver was frustratingly bad last week. I actually had a pretty big position in silver calls. So on Monday, I thought I was a genius, because it looked like it was about to take off. So that's right here. Um, I thought it was looking great. It was breaking out. Gold was ripping. I mean, the market was getting hit. Yeah. I loved silver. I I added I added multiple times, and I didn't take any off when it got up to like 1760, 1765, because I mean, really, like I thought it was like setting up perfect, and then it just reversed and like completely collapsed. I have read that people are kind of like chalking it up to um, that they have more industrial applications. So silver has more use in like industrial applications. So that might be why. I don't necessarily know like the exact reason. It's frustrating. I stuck with basically some, just to see if it rebounds at all. But overall, like this is like a busted trade for me. Like so, As much as I liked it last Monday, I really don't care for it right now. I'm sticking with a little bit to see if it does rebound, um, because it's still metals do tend to see like some money flow as like a safe haven, but right now I really just don't care for the action, especially because it's below the 200 days. So that's why I was saying like TLT really acting the best of like the safe haven names. Yeah, gold, it's holding in okay. I mean, I don't love the reversal, but it is holding in okay. All right, like it's holding in all right. I mean, it if it loses the 50 day, which is at like 147, then you really gotta like then you gotta be like super cautious because I think if it loses the 50 day, you're probably looking at a move down to like the lower 140s to hit that 100 day. Um, So that's why I haven't re-upped the gold strategy on for options to play yet because that's basically my thinking. The GDX, like I'm sticking with some GDX, even though like that's rolled over too. So I prefer like right now to see if like the GDX can bounce. So sticking with the little GDX, but gold specifically, um, I'm kind of like waiting and watching to see how this develops because I don't really like the reversal, at least like the way it looks at the moment, especially in the context of what silver did. A little bit more cautious. All right. Yeah. Yeah, I mean, it could be also what I was reading about gold is that people might have been um, selling gold to like raise funds to meet like margin calls, or just selling gold to raise funds. Like people want to like raise cash, maybe selling gold. It could be any number of reasons, but it kind of makes sense. Okay. Any questions? If not, we'll go over, jump into like the slides. Yeah, I mean, if you guys have any questions while I'm going along here, I mean, just fire them off. I get worked up, and I can go off. I can go off talking for like 20 minutes straight. So, um, just don't hesitate to fire them off, even if it's not necessarily like a talk, what we're talking about. Yeah. Okay. Yeah. You have my email, right? Or if you want to just email like email your contact at T3, and like they always forward them to me too. So yeah, if you have a few questions, like yeah, just draft an email and shoot it over. I can help out. All right. So I've actually done. I did a video last week, one of like the YouTube videos, um, talking a little bit about what I call I call it like a 2x2 tape. So kind of just like for me it's like the easiest way to describe my focus during like periods of higher volatility. Um, and some of what I talked about in that video, kind of going to go over here, but we'll talk about some things a little bit more in depth. But I mean, I feel like um, people people approach volatility, they approach trading during higher volatility environments a little bit different. To me, because so much of my strategy uh, is option based, I feel like kind of need to adapt pretty quick because just like we were talking about with like the spider options, I mean, the pricing really changes, and it's easy to like get in trouble quick, um, if if you don't really have like a plan, because the contracts get expensive, and then you get possibly like you get like a counter trend move after you're already paid up for expensive contracts, and it just it's just like a bad combination. So um, it's just it's good to go over this. I'm sure each of you will uh, have like a slightly different approach to volatility and how you trade it. But I just think at the end of the day, it's like it's important to have some idea of how you want to approach like a more volatile environment like we're in, and um, you know whatever works for you best. Whatever works for you is like the best way to do it. But if you can kind of incorporate like some of what I talk about, I feel like that might be helpful too. All right. So again, I mean, like as the market changes, so like the character, meaning like goes from like a trended environment to a volatile environment. You really got to like change the trades that you're doing. Like when we're in that trending tape, so from like October, November, December, January, right? We're in that really clean, clear, steady trend. Then I love those midterm swings, like the 2 to 3 week like swing trades in those environments are like my bread and butter. Just because you got like a really clear roadmap. The action is very steady. You don't have a lot of overnight gaps, and um, even though patterns can take a little bit longer, right? Like today, today the spider has moved 4%. I mean, in a trending tape, you're not going to get a 4% move in the S&P, but it doesn't matter because like your visibility is higher, right? Because you can basically, you see like the steady, like stair stepping action with like riding the 8 EMA up, riding the 20 EMA up, or 20 simple up, right? So I really love like the 2 to 3 week swing in like that trending environment, because it's just it's like a nice combination of like the run amount of time, and like more conservative price targets, all right? Um, in a volatile tape, like visibility much lower, right? Like today, Friday, Thursday, we're moving right now. We're moving 10 points a day. I mean, it's hard to really know or have conviction beyond like maybe a couple hours or like 2 days. Like right now, I think maybe we'll have like an update tomorrow, but like Wednesday, I have no idea. I mean, we're all over the place and we're moving so fast that you don't have the visibility for like those extended moves like you would in like a trendy tape, like that 2 to 3 week time frame, right? Like I don't have any idea where we'll be like next week, like let alone 2 to 3 weeks from now, right? Um, so for me, like when we get into these environments where the volatility is higher, like I'm focusing more on like very short term strategies, or we'll talk about at the end is like long term strategies, right? So like 2, 3, 4+ months. Um, like one of like the hallmarks of like a higher volatility environment is just that like things develop fast, right? So setups develop quickly, trigger quickly, play out quickly, right? Because the daily trading moves are just so much larger. Um, and while that's good if it's working in your favor, it also is bad if it's working against you. So you need to have like that trade management technique really like down packed, right? Like you need to be respecting stops. You need to be really managing like your positions when the targets get hit, taking money faster, taking risk off quicker, rolling faster, right? I mean, it's just it's always important, but it's even more important when you get into like a market like we're in, where like you know today we're up 10, but tomorrow we could be down 10. So if you were long something today, tomorrow like the entire game could be gone, right? Um, so some of the things that I like to do, and these are a little bit more broad based, but I'll get into some more specific things too. Just I like following momentum. I mean, it's like you don't really want to swim against the tide. Um, right. I mean, sometimes it's warranted, but like in a market that's moving like we're in, like you kind of just want to ride momentum. Like when things are selling, don't necessarily want to get in front of it. You want to just ride like the bear strategies, and then when things kind of like start to slow down on the downside, then you want to flip and ride things back up, right? So just you're focusing on just on like solid short-term patterns, and moving averages are like critical like right now because they at least give you like some focal points to like look at, right? So that's why like I talked about the 200 day a lot, spiders. But like the Qs, you could see like how relevant that 200 day was on the Qs. I mean, it literally was like almost like the bottom to the cent on Friday. So like the moving averages, they're going to be your best friend in environments like this, just because they give like really good levels a lot of times to like focus on as like either like your stop or like your target, right? Or even like an entrance potentially. Um, Narrowing the targets, just I want more conservative targets and I want like tighter stops. So I basically just I want to be able to be like taking money off the table faster. So that's really why targets quicker. Um, I want to cut back risk as quickly as possible, and I just really don't want to let the trade like reverse sharply on me. Like so if I was like leaning into like a downside put position on Friday, like I would probably be pretty upset with like the 350 rally and then today's like 10-point rally. So I want like manageable targets because I want to be just taking money off as fast as possible. Also sizing down. Um, it's things are moving so fast that I mean, it's a like your risk is already higher, um, but you don't necessarily need to risk as much to make the same amount of money, right? Because when you're getting 10-point moves in the spiders on a day-to-day basis, the trades are really like stocks are really swinging around in like large ranges, and it's easy to like capitalize a lot faster, right? So I'm sizing down, right, and I'm focusing just on fewer positions, just because like you don't want to be like swamped with like positions trying to manage like 50 different things when the market's going nuts. So scaling back your size a little bit so you're comfortable trading, right? Maybe you have to give you know, maybe whether it's like the dollar amount or like the number of contracts, but just scaling down your risk, your size per trade, and then try to focus just on like slightly fewer positions. And then, like I said about the time frame, right? So, like, if you're only holding your positions for a couple days, then you can really like shorten the time frame of your contracts. So, like 2 weeks, 3 weeks. Like, I mean, I've been doing like last week I was doing like a handful of like really like short term day trades even. So just like the weekly contracts, but you really have to pick your points well and keep your stops tight because if you're doing weekly contracts right now, um, the moves are so large that if it if it moves against you, it could be painful. But also, you're paying so much for those weeklies that holding for like 2 3 days at a time can be kind of tough because like the implied volatility you really see like that crunch on a day-to-day basis. All right. All right. One week. You mean like for instance like buying next week's options like today? I do. Yeah. No. I will sometimes. Um, I like the I like the 2 week time frame actually like around earnings because it gives like a little bit of like it gives a little bit of like almost like an insurance policy if they don't move right away. I do like the 2 week time frame though because what I find is like normally if the implied volatility is really high on like a weekly contract, so whether like right now because the implied volatility is high just across the board, or if it has earnings, what I find is like actually like the contracts that are like 2 weeks out are actually oftentimes like way 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 like underpriced in the sense that like 90% of those contracts, like the premium is like that first week. So the following week, you're really not paying much um, implied volatility, and it's only like small time value. So that's why like earnings, like a lot of times you'll see me at, like the 2 week time frame like, that I'm going after. It's because you're not really paying that much more because so much of the contract is still implied volatility, but you get like a full extra week on top of it. So it's not a bad idea in like in for contracts that have higher implied volatility is like that 2 week time frame because um, like so much of like the contract is built into like the near term. But that yeah, so you'll see what I mean when I'll talk about the option pricing on the spiders um, after these slides. You kind of see what I mean by that. I'll circle back to that idea, John. Man. Yeah, exactly. Yep. And so you'll see what I mean by like all of this, like in terms of like the pricing, because I'll break it down a little bit more. Um, I mean, and so like um, so what I'm talking about here in the slides is kind of like the same idea too. So long-term contracts, right? Like 2, 3, 4, even like 5 months out, like you're gonna notice that like compared to like these short-term options, like the prices are relatively a lot lower. All right, because the implied volatility is so high right now. It's like yes, you got to pay all this extra time value, but what you'll notice is that so much of like the price of that contract is built into like the near term that a lot of times you're getting like 2, 3 months of extra time for really not that much more. All right. Um, and like in these types of environments, like if you're worried about overpaying for options, like these can be like a good way to offset that a bit. Um, the only thing I'll say with like when you go into like a longer term position is that I like to like widen my stops. Because if I'm entering like a position that's like 3, 4 months out from expiration, trying to manage it like super tight on like a day-to-day basis can be a little bit tough, and it kind of defeats the purpose almost, in my opinion. So when I step into like a longer term trade, I still want like a stop range, but I'm also willing to give it a little bit more room, just because time value should remain relatively high especially in the near term. So I like to like widen my stops a little bit on longer term positions, and it's because like time value, right? I mean, um, even if implied volatility gets a little bit of contraction, the time value should remain pretty firm, especially if they're like 3 or 4 or 5 months out. And then calendar spreads, so horizontal spreads, right? So um, these are like particularly interesting right now because they're kind of like they're basically a strategy that's trying to take advantage of implied volatility, right? Like that's what they're designed for is like taking advantage of higher near term implied volatility. I mean, like on a in like a lower in a lower volatility environment, they don't always work that great. But right now, when you have the option pricing kind of out of whack, like this is like a great strategy for this type of trading atmosphere. So it's like selling this week's calls, buying next week's calls, or selling this week's calls, buying like the April calls, right? So it's basically like trying to like finance the purchase of a longer term swing using like the premium from like the short term contracts. So that's definitely like a strategy that maybe you want to start looking at in this like higher implied volatility tape. All right. And just quickly, the secondary moves, like I do like rolling and I'll roll pretty quick, but I'm also I don't mind hacking sometimes in these types of these types of markets. Like if I'm just get in and the thing moves and the thing's double, I might just take the whole thing off and not even like try to like roll up or roll out. Like especially if it's like kind of like a counter trend. So like right now, if we get like a big bounce and some of these options double, I'm probably just going to take them and not even think about rolling. I just want to lock in the money because volatility is so high. I figure I'll probably get like another opportunity. So I might normally I love rolling, but in these types of tapes, I might kind of abandon that a little bit and just like kind of like take everything off at once instead of like kind of rolling and stretching for that secondary move. And also one of my other like favorite things I normally do is kind of push option strategies like out through like an upcoming catalyst. So um, you know if we're like a month and a half from earnings, what I like to do is like go out 2 months on like a swing trade because I pay for the catalyst. Uh, in this type of tape, I don't always do that because um, normally like I feel like the trade will probably play out before that, right? If it's like less than a month specifically, like I mean, I'm probably not going to be holding through that, especially if the volatility is high. Also, I mean, what you've probably been noticing like the last week is that earnings kind of take like a back seat, right? Like when the volatility is so elevated, earnings setups, stocks aren't necessarily reacting great to earnings, so they're almost like secondary. So paying for like that earnings report or even like targeting like an earnings strategy, it seems almost like a secondary um, like a secondary trade idea. So I don't like well normally I would like to push the trade expiration through like a catalyst, but this type of environment I might not do that. Huh? Any questions? All right, let me pull this up. All right, let's go over like we'll go over like the spider. Yeah. Oh, good. I mean, to be honest, like I feel like I feel like there's a chance that that trade's lower again tomorrow. I can't imagine the number is going to be very good. Um, I kind of like weighed it from like a risk reward perspective. Like it was basically 1 to 1 with like the pricing where it was today. It was like the spread the spread. Yeah, I agree with like your bias though. Like I would be more thinking like lower on Coles too. I Yeah, I'd be thinking more to the downside as well. Okay. All right. So this is what I mean when like the option pricing is kind of out of whack right now. All right. So um, we'll talk about Friday's expiration. So these are the spider contracts you can see up here, like at the SPY. So these are the contracts that expire on Friday. So you have 4 days left to trade these things. So the the at the money 307 straddle right now is more or less like 11 and a half points. All right. So these expire in these expire in 4 days and they're trading for 11 and a half points, right? Like look at the implied volatility. Like this is typically these contracts typically are like a low teens applied volatility, and right now they're nearly 30 percentage points above their historic, right? So just completely ridiculously elevated, right? So 11 and a half points for the 307 straddle that expires on Friday. Now, this is what I mean by like implied volatility is so off the board that like contracts are kind of priced out of whack. So 11 and a half points for this Friday, right? Like if you go out through next Friday, that same straddle is about what like 15. So so basically like 2/3, actually more. So it's actually more like 3/4 of the price, 3/4 of the price of next week's straddle. 3/4 of that price is the next 4 days, right? And it gets disproportionately out of whack like the further out you go. So if I went out to April, right, 307, the 307 straddle for April is trading at about say about like 23. All right, so that's what? That's one, two, three, four, five, six. So that's 6 full weeks of on top of this week. So you have 6 weeks on top of this week, right? But 50% of the cost of that straddle for April is this week expiration, which is crazy. So you're basically paying 50% for 4 days and then 50% for 6 weeks on top of that. So that's kind of what I mean, like how like the pricing is so out of whack on like shorter term options, right? So like calendar spreads, like what I mean with that is like it kind of comes down to like your maybe your risk tolerance, your risk preference, or even like your biases. But like say for instance like you didn't think we were gonna have like that big of a move by Friday, right? And you sold this Friday's 307 straddle and you collected like the 11 and a half, right? And then you went out and you bought the April straddle for 23, right? So assume like the spiders don't move 11 and a half points by Friday, then basically like those contracts expire worthless. Odds are that the April options are going to probably be worth more than like, they're going to be worth more than 20. They may lose some value, but probably not that much. So you basically will have like financed like 50% of the cost of your trade just by like 4 weeks of premium, which is nuts. It's absolutely nuts. So that's kind of what I meant, right? So when I was saying that like the premiums of near term contracts are almost like prohibitively high, it's because of that, right? Like the cost of calls and the cost of puts have really gone up so sharply that you either need to like you need to basically time the move perfectly, catch a big move immediately, or you're probably going to be losing. Yeah. So I mean, like there's still opportunity with like these short-term contracts, John. Man, I mean, like there is, but like I think what would probably work better, especially if you're looking at like these really short-term contracts, are like spreads, right? So if you wanted to, if you were bullish and you were thinking we could get like a rally, or maybe like tomorrow you're bearish, right? Or you're bearish through Friday. Like what I would prefer to do is like a spread, right? So say I think like so again like the 307 strike straddle on the spiders is trading for 11 and a half points, right? But like say like I think the SPY maybe could trade back down into like the 300 range, right? But if I bought like a 305 put and Spiders closed Friday at 300, like I'm basically just breaking even. Maybe not. I might even lose, right? Because like the 305 puts trading for like 525. But what might work well though is like the 305 300 put spread, right? Like you have to get a little bit more creative in these types of environments because if you bought the 305 300 put spread, it's going to cost you about maybe like $1.50, right? And then if it closed at 300, instead of basically breaking even, um, you're coming out ahead by almost 3.5 points, right? So that's why, like, one of like the points I really wanted to like make was that with options like this, you kind of need to like open up, expand the playbook. Yeah, yeah, exactly, right. So it's not that you should avoid weekly options. Like that's fine. It's just you kind of have to like go like one step beyond just like your standard calls and your standard puts because in this type of environment with that high implied volatility, you're paying so much that a lot of times it removes a lot of like the upside reward potential. Yeah. So spreads are going to be your best friend, right? So whether it's just like your standard vertical spreads like call spreads, put spreads, um, calendar spreads, right? So like those are called horizontal spreads. Flies, they're a little bit more challenging, but still kind of like the type of idea or strategy you want to be focusing on. Yeah, it like spreads are they're really going to help just manage the implied volatility risk a lot better in these environments. So you sacrifice some potential because if the spiders were to drop to 295, obviously like the reward potential is capped below 300, but at the same time, you're still going to be able to like go after like closer to the money contracts with still a pretty nice solid reward profile. Um, which also, if you're looking to like hedge things out, kind of like a nice idea too. Yeah. No, yeah, 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 I knew what you meant to, Russ. Yeah. So, like, do you guys have any questions about that? Like, it was just like one of like the points I really wanted to like make is that like when we're in these environments, you got to be like particular with like your trade management. So like, you know, more basically like tighter stops, more easily achievable targets. You're taking money quicker. I'm not always rolling, even though I do. I really think that rolling in most markets is like the best way to approach it. But like right now, when you're getting like 10-point moves a day, I'm just a little bit more anxious to like lock in the trade versus trying to like stretch for that secondary move. But then opening up the playbook, looking at spreads, horizontal, vertical. Um, it's really just about managing like the higher implied volatility, and that's I've been trying to like draw up some ideas or write up some like trade ideas that kind of revolve around these. Um, yeah, well, like sometimes what you need is just to like maybe like you know not like take a step back necessarily, but kind of like maybe like slow things down, Jungmin, um, and maybe just wait for the setup to come to you, and again maybe like size down a bit, just so you're more comfortable in the trade. Um, and it's all. I feel like all you need to do is you need to get one right. You get one good trade, kind of like gets that confidence back, gets like a little momentum going, right? So like the worst thing you want to do is like when maybe get spun around a little bit or maybe had like a bad like day or two. Um, like the worst thing you want to do is just like trade for the sake of trading, try to make it all back, just like force maybe like subpar ideas. Um, yeah, I mean it happens to everyone. I mean it's you know as traders. I mean we're not machines. Like that's like algorithms. They don't have any like memory. They don't have any emotion. Unfortunately, as humans, like those are things we really can't avoid. As much as we want to like tune those things out. It happens to me. It happens to everybody. I'm sure it happens to Russ. Um, it's just what I like to do is just maybe just like take like a proverbial step back. Just maybe focus on like one or two or three names. Wait for like a setup to come to me. Maybe size down a bit. Just get something that like works in my favor. Take a little money off, right? Or lock in maybe just like a small winner. Um, just to get like that confidence back, maybe get like a little momentum going. Um, because it, once you get like your confidence back in place, I feel like it's just like a better mindset in general. Um, so yeah, like it's everybody goes through like the stretches where like they just have like a bad few trades or like a bad couple days or even a bad couple weeks. Yeah, yeah, you will. Like, it happens to everybody, and um, it's just about like again like just kind of like controlling like the emotions, just taking a step back. Like you're obviously know what you're doing. You're like you've done this, you've done this for a little while. So it's not as if like everything just all of a sudden like you forgot how to trade, right? You forgot how to like pick like a winner. People just go through stretches where it just things don't line up, right? Or maybe you got like a little bit of bad luck. Maybe you just read the tape wrong, right? So just you know again, like just be a little bit more patient. Just wait for your setup to come to you. Don't feel obligated to like trying to rush in, because like days like this, like everybody's gonna say, oh, crazy, crazy, crazy. You're gonna see like the on the news headlines, they're gonna say biggest day in 11 years for the S&P, and you're like, oh, how come I didn't make money, or how come I didn't make more money? And it's like you know just focus on yourself. Like it's just try to tune out the noise, take a step back, um, just be patient, and just kind of like start to build, right? Yeah, it's okay. It like it happens, and sometimes like sometimes like missing opportunities, it's not you know it's not the end of the world, right? Like especially in this type of environment, like there's going to be plenty of opportunities tomorrow, the next day, next week, 2 weeks from now. I mean, I like that's what I am literally most confident of, is that we're gonna have good trading, like wider ranges, higher volume now, at least for a few weeks. Like 2 months from now, I don't know, but a few weeks, like I am very confident that it's going to be good trading, a lot of opportunities. So, like don't worry about today, don't worry about Friday, focus on tomorrow, and just trying to like get back into like a good mindset. Maybe like take try to like just get like a small winner, maybe a couple small winners, just get a little bit of momentum going, and before you know it, you have your confidence right back to where it was. Yeah. And if you ever any like questions, like or you want to like bounce something off of me during the week, like please don't hesitate to reach out. I mean, I'm on the VTF in the main room like all the time, so you can either reach out to me that way, or if you're not in the main VTF, you can just shoot me an email, and I'll if I can help, I will, or I'll try to, um, at least as best as I can. All right. Okay. So, I mean, do you guys want to go over? So this week is really like retail heavy in terms of who's reporting. Like we talked about Kohl's, but you also have Costco, which had kind of a crazy day. That they report later this week. Target tomorrow morning, Burlington, Dollar Tree. Um, so I don't know if you guys want to like go over maybe a couple setups, or if you guys are exhausted, we can kind of like wrap it up. Definitely went over a lot. Next week will be a little bit heavier from like a tech point of view. Uh, actually, this week too. I mean, we have like Splunk is this week, Zoom, which has been kind of in play the last few days. That's this week. Um, Sienna, Okta, Ambarella. The thing with retail this quarter is kind of why I've been like holding off on some of the retailers, just because they guided in January, so it kind of removes some of the volatility around earnings. So that's why. Like normally, I love trading retail reports because um, some good action, but specifically this quarter in general, it's usually a little bit lower because they most names guide like in January right after the holiday season. So that's why I tend to avoid them. Um, but Nordstrom this week actually they haven't guided yet, so that could be an interesting one. To me, I'm more in the bull camp on Amazon right now. Um, I think that I think that this could be um, this could be one that snaps back pretty quick. Uh, I mean, definitely they're going to be impacted. I'm sure they're going to have like some sort of like supply chain disruptions too. But I think it really it wasn't up as much as a lot of the other like big tech names. I mean, it really only just woke up after this last quarter report, um, and it's not really extended. Uh, and I think that compared to like an Apple, probably will be impacted a little bit less. So I think that this is one that I definitely want to focus more on the bull side. Uh, yeah, I I still even though it's kind of had like kind of a roller coaster couple weeks. I mean, I still like the setup. I could see this if the spiders or if the market does get like another like 10 point bounce. It wouldn't surprise me to see that like Amazon back in like the like this area, like the 2040 2050 area. Then what it does from there, we'll have to see. But if we get like another push in the market, like tomorrow, later this week, it wouldn't surprise me to see Amazon like up in like the this like 2030 2040 2050 area. Yeah. Um, which I hope it happens soon because I mean options would probably those April call spreads would probably be they at least be up. I don't know to what extent, but they definitely gain. Yeah. I mean, uh, yeah, yeah, like I'm still considering it, but I like taking it like within like the context of a lot has already been impacted based off of it. So I'm not going to be trading like I'm not going to be trading like the Modernas or like the APTs or the Lakes. I'm not going to be trading those. Um, but like in the sense that like 3M, like I thought that this could still have like another move. Clorox was incredibly annoying. I don't know what triggered I don't know what triggered Friday's washout, and then today it came all the way back. Just want to like you know wanted to like punch my screen when that happened. Um, I don't know why that did that. Um, but you know, like these types of it, or like Gilead. Like I know Gilead is a coronavirus play, but I kind of also like it because they had that deal, so they made it official. Actually, a pretty good day for Gilead. Um, so like those types of names, but also, can you hear me? Test. Hmm. Is it off? Let me refresh real quick. Let's see. Did that help? Okay. Um, so what I was gonna say, also like in terms of like bearish ideas, the coronavirus, like I still think kind of what we mentioned earlier or talked about earlier. Like I still think that. Huh, sorry, trying to figure this out. Okay. Oh, okay, okay, okay. Um, so I still think you're probably going to get a lot of warnings out of maybe like chip stocks, right? I feel like there's probably a handful um, of chip names that or at least like large chip names that probably still do to warn. So if you get bounces in some of like the semis, some of maybe like the more multinational tech names, even like maybe multinational like industrials if they haven't gotten real beat up, like those would probably be stocks that I'd be looking to um, maybe like focus on some like bearish trade ideas. I mean, just maybe even like like the SMH in general, right? Like kind of getting a bounce and a back test of the 200A. If you were to get like a consolidation underneath the 200A, might be like something like I look at because I still think that there's a lot of estimates that are probably too high, a lot of companies that are probably due to warn. Microchip tonight just came out and warned, but I feel like there's a lot of like semis have exposure either to like the Apple ecosystem or like the China ecosystem, right? I mean, and I feel like there's still a lot of like negative news, like a negative news cycle due there. So probably things I'll be looking at on the downside. Um, so in that sense, like I feel like the coronavirus plays a part in them, but they're not really like coronavirus type stocks, or like even like Nvidia. I mean, Nvidia just they just reported earnings and it rallied all the way up, but you got to imagine that their numbers are going to be impacted by like the disruptions in China. So like this, like AMD, like these are like patterns or setups where right now they're not too compelling one way or the other, but maybe like a week and a half of consolidating in lower levels, maybe set up like almost like an H setup where you get like a roll and like a retest of that low. So that's kind of what I'm thinking. You know, like I just don't see how estimates aren't going to come down, right? Like think about. I mean, like Nike. I mean, it was almost like it was almost like I felt like it was like a daydream because like Nike was just hanging around its high, hanging. Apple warned. I mean, you knew that like basically the Chinese consumer was like on hold. They weren't spending. Like China is not only a big manufacturing area for Nike, but it's also from like a consumer spending point of view, right? Then then Adidas comes out and they said that like for like the 3 week stretch starting the end of January, their sales in China were down 85%, and still Nike wasn't rolling over. And like there's still like these opportunities where it seems like stocks just aren't responding to like the news. I mean, it's like the constant flow of news seems to be like set up like these obvious trades where like people are still too bullish, analysts still haven't taken down targets. Yeah. Yeah, and it's like one of those things where like I feel like Nike hasn't even like come out and like said anything yet, and I mean, it might not be as bad as everybody fears, but it's certainly not going to be good, you know? So, like, I feel like these are the types of names, like, if Nike bounces and consolidates in, like, the mid 90s, maybe look at, like, another short, right? Because, like, these are the types of names where you know there's going to be an impact. You know, estimates are probably too high because analysts haven't really started to take down, like, their numbers. So, you know, like these are the things that I'm kind of like thinking about right now. Like there's not like a trade in it right now. Yeah, I mean Nike's trading at like a still trading in like a 30 something PE too. You know, I mean like these like Apple was like a mid 20s PE. Nike was like when it was up here was at like a 35 PE. So just really expensive stocks with obviously like deteriorating like near term fundamentals. Um, so yeah, I mean, again, like long story short, like I'm watching. Like these are the types of names I'm watching. I want to see where the bounces go. I want to see where they consolidate and if they set up like short opportunities because like these would be like the names I'd be more interested in, kind of stepping in for like shorts because like I feel like there's probably like there's like a whole nother wave of like negative news due out in like these types of names. All right. That's like my thinking at least. We'll see how like the technicals shape up, but that's kind of what I'm looking at. Yeah, yeah, yeah. All right. Well, how about we? Well, I'm gonna ask you guys any more questions. If not, we can wrap it up there. I mean, been rambling in your guys' ear for like an hour and a half now, so probably getting exhausted. Yeah. Okay. Perfect. Okay. Great. No, that's what we're here for, right? So appreciate you guys sticking around. It was kind of a long day. And again, if you have any questions in between now and the next time we get together, please don't hesitate to reach out. Um, even if you just want to bounce an idea off me, like I'm totally cool with that. You know, like a trade idea, maybe something you're looking at. Um, hey, it's happening, Jin. Yeah, just wrapping it up here. This will be up on the website. This will be up on YouTube, typically by like early afternoon at the latest. So take a look, check it out. If you have any questions, shoot me an email or you know how to get in touch with me on the VTF. Um, all right, but you know it's gonna be a busy few weeks. So stay mentally in the game. There's gonna be a lot of opportunity. You know, if you miss some trades one day, a couple days, like don't beat yourself up. Just be patient. Let the trades come to you. And you know, again, I mean, like I'm of the opinion that we're gonna have higher volatility and some good trading for at least for the next couple weeks. So there's going to be a lot to do. All right. Yeah. Cool. All right, guys. Well, have a great night. Best of luck this week. Should be an interesting one. All right. So um, yeah, have a good night. Great week, and talk to you all soon. All right. Yeah. Have a good one. All right. Take care. Yeah. Yeah. March Madness, indeed. It's a good way to describe it. All right, guys. I'll talk to you.